Yo, I'm Brendan. How do you maximize your dividends whenever you're using Acorns to invest? Well, today I'm going to show you just that. I've gone through and analyzed the Acorns portfolios to see where we're starting from in terms of dividends, and then I've compared that to being able to customize your portfolio by buying an individual stock that has the absolute maximum dividend to it. For whatever reason, it's fun to have dividends. It's fun to get a check every month, or you can just let that dividend reinvest itself and buy more and more of the same stuff that you're already investing in. So this is the ultimate Acorns dividend guide. Let's go. By default, whenever we're investing with Acorns, we're not getting a ton of dividends because we're put into something like this, which is a well-diversified portfolio. I'm in the aggressive ESG portfolio, and so I've got these funds that I'm investing in, which are all fine and dandy, but they're not particularly tailored towards dividends. How dividend heavy are they? Well, let me show you. To do this analysis, I actually used my Seeking Alpha membership, which up until this point, I've got to be honest, I was never that into data and analysis and having some separate membership to some investing data website. It just didn't seem necessary to me. But now that I've had it for a little while, I actually really enjoy it. It's weird. I didn't expect that, but it's the truth. So what I did was start a new portfolio here on the side, and then I was able to put in the Acorns Aggressive portfolio. Here's my Acorns Aggressive ESG portfolio specifically. And these are the 5 different things that I'm investing in through Acorns. And it gives you general information, but we're going to skip right over to dividends and look at the kind of yield that we're getting. And based on our portfolio here with Acorns, we can see that 51% of our overall money that we're sending into Acorns is going in to ESGU, which is this first one down here at the bottom of the list. This yield is only 1.18%. That's a tiny little dividend. It's not nothing, but it's tiny. The next biggest portion is international company stocks, and that's down here, ESGD. That must stand for Don't Be in the United States. And that yields about 2.3%. It's easy to see that every single investment that you have with Acorns Aggressive portfolios does have some kind of dividend, but it's not enough. We're trying to maximize here. What if you don't like ESG stuff? Well, here's the Acorns Aggressive portfolio non-ESG version. The vast majority of that portfolio is all in VOO, and that's only a 1.5% dividend. The international fund actually has the highest dividend at just over 3%, which is cool, but I'll bet the portfolio on average here is probably 1.75% or something like that when it comes to dividends. We can do better. The way that we do that is through Acorns custom portfolios. Fair warning, to be able to do this, you've got to be paying all the money to Acorns, $9 a month. I know, it's expensive to live this fancy life and have a custom portfolio, but this is how you maximize your dividends. So if you're paying that $9 a month to get the highest Acorns feature, you have this option to add a stock or ETF, and the maximum that you can put in to this custom portfolio right here, 50%. So we're still stuck with 50% of the standard aggressive portfolio with the 4 or 5 different funds in it. That's only probably 1.75, maybe 2% dividends at tops. Now our job is to max out the dividends with everything else we have access to through the custom portfolio. So what I did foolishly was I started to go through this giant list. There's about 110 companies here. Most of them are individual stocks. Some of them are ETFs. And I was going through this list all yesterday afternoon. Into yesterday night, I was putting them all in a spreadsheet. Giant waste of time because I didn't need to do that. Instead, I just made a portfolio in Seeking Alpha. This is all of the Acorns custom stocks right here. See, I'm not used to having these good tools yet. There's quite a few. We've got a big list to go through here. So how do we easily just rank them? Well, it's going to take me all of one click. Boom, sorted by yield. Yield is the number that we're going for because we're not afraid of dividend traps. We just want to make the most money. The simple, albeit most risky answer when it comes to maximizing your dividends with Acorns is to just pick a custom portfolio with 50% of MO in it. What's MO, you might ask? It's Altria. They sell cigarettes. And if we dive a little bit deeper into the information here, we can see a little bit more about them. We can see their dividend yield going forward, 8.75%, which is pretty incredible. Their payout ratio is really high. What this basically means is the amount of income that the company has to do whatever they want with, how much of that is going towards the dividend. So let's say they make whatever, $100 this quarter, they're going to end up spending $77.58 just on us, just giving us the actual dividend. And so that's a large portion of the income that they have. Ideally, you want the payout ratio to be pretty small because what that tells you is they're super profitable. They've got tons of money laying around. They can do whatever they want with it. And they're going to also pay us a dividend. Right now, this is telling us MO has to work pretty hard to pay this dividend. It's not impossible. And they keep growing. Like the 5-year growth rate of the dividend is at 5%. So it's not terrible. And it's been growing for 54 years. So it's got a pretty decent track record, but no matter what, whenever you're picking an individual stock, it's going to be riskier than picking a whole fund full of stocks. But if you did this, and if you picked Altria, which is MO, and you did a 50% custom portfolio with MO and a 50% custom portfolio with Acorns Aggressive, then half of your money would be getting this 8.75% return, and half of it would be getting like a 1.75% return. So if we average that out, I would estimate you'd probably be getting about a 5.25% dividend return on your money. That doesn't account for any kind of just growth, that the stocks go up, the price goes up, you make more money, way to go. By default, the Acorns aggressive portfolios are a lot more oriented towards growth than they are dividends. And so I would expect most of the appreciation, most of your returns, your profit to be coming from growth there. And I would expect the opposite to be true for MO, for Altria, because it's pretty much all dividend focused. But that's pretty risky. So how could we maximize our dividends with Acorns, but also have it not be too risky? Well, we've got a couple different options. Option number one would be to basically take the top 5 or 10 of these stocks, pick those, and have them equally distributed into your custom portfolio. So let's say you got 50% of your Acorns portfolio to work with. You pick 10 of these and you say, hey, Acorns, I want 5% of my money to be in each of these 10 stocks. 5 times 10 equals 50. Bada bing, bada boom. Now you're a lot more diversified. The 10th highest payer is CVX, and that's about a 4.2% dividend. So you're going to significantly lower your return by, a percentage point or two, but it's also going to be a lot safer that way. But that's probably not what I would do. If I was shooting for dividends through Acorns, I would probably do something that's kind of a mix of those two options. I would choose door number 3, please, and that would be JEPI. Let's take a look. The JP Morgan Equity Premium Income ETF. So unfortunately, it doesn't have a 5-year growth rate because it's actually got negative growth over time. That's not what we love to see. It means that the actual dividend amount has gone down over time, which isn't great. The 12-month trailing dividend yield is still really high though, 7.5%. But the great thing about JEPI is this little tab here. Holdings. If we look at this, we can see that JEPI is made up of a bunch of different companies. It's not just selling cigarettes. It's not just selling pharmaceuticals. It's actually got 134 different companies made up in this one fund. It's funny because it's even some of these other name brands that you see that are broken out as individual stocks you can pick from an Acorns custom portfolio, like Amazon, Microsoft, Meta, Intuit, AbbVie, Visa, Accenture. Like a bunch of these are actually individual stocks that you could pick too. And it's fine if you want to break it out and do that. That's totally cool. I just like the simplicity of having JEPI as 50% of your portfolio, the Acorns aggressive as the other 50%, boom, done. And my back of the napkin math tells me that you'd still be getting about a 4.6% dividend yield, something like that, based on the numbers for today, assuming everything kind of holds constant to what it's been doing lately. That's what I could estimate. Could be totally wrong, probably will be totally wrong, but that's our best guess. But I think regardless of the option that you choose, you've got some pretty cool windows of opportunity here because you can potentially double or even triple the amount of dividends you're getting with Acorns. And if that's kind of your MO, if you don't feel like, your MO, accidental Freudian slip there for Altria. If that is what you want to do, if that's your prerogative to prioritize your dividends, but you don't want to leave Acorns and go to some other platform, this is probably the way to maximize it. Ultimately, a lot of this kind of thing just comes down to personal preference. The most important thing is that you're investing as early as you can, as often as you can, and with as much money as you possibly can. The most that we get shoveled into these investing accounts and let them cook for as long as humanly possible, the more money we're going to make. If we wait, if we fiddle-faddle around, we're not investing very hard, or if we keep taking the money out because we're afraid of the market dropping or whatever, that's where we're going to be losing our opportunity to make a lot of money. The famous saying always rings true: time in the market beats trying to time the market. But luckily for those of us who use Acorns, that's really what the platform is all about. Put it in there, let it sit, forecast out what it might become in 30 years, and see what an awesome nest egg you could have. It's really cool. If you're curious to see more videos about dividends and what I've done for the last year, this is my whole dividend investing playlist right here. So the last 12 months, I've slowly built up a dividend investing portfolio in Robinhood, and here's all my results over the last year. So check this out next. All right, see you guys later. Bye.